Hi, good morning. Today's topic is payroll. Under payroll, we are going to discuss income tax. So, income tax refers to the tax that is levied on personal or business income as per the Income Tax Act 1961. This section covers the income tax on salary. To understand the Income Tax Act, you need to understand the basic terms used in the Act, which are discussed one by one. Number one is assessment year. As per Section 2, subsection 9 of the Income Tax Act 1961, assessment year means 12 months commencing on the first day of April every year and ending on 31st March of the next year. For example, if the income is earned in 2021 to 22, then 21-22 is referred to as a financial year and the assessment year will be 1st April 22 to 31st March 23. For the financial year 20 to 21, the assessment year will be 1st April 21 to 31st March 22. Next is previous year. The previous year refers to the financial year immediately preceding the assessment year. For example, for 2021 to 22, the previous year will be 1st April 2020 to 31st March 2021. SSC. As per Income Tax Act 1961, account number 43, an SSC is a person by whom any tax or any other sum of money is payable under this Act. Person. As per the Income Tax Act, the person include an individual, a Hindu undivided family, a company or organization, a firm, an association of persons or a body of individuals, a local authority. Next is total income. Total income is the total of earnings on which tax is calculated. Total income for resident. As per the provisions of Income Tax Act, the total income of any previous year of a person who is an Indian resident includes all income from whatever source earned. Total income for non-resident Indian. As per the provisions of the Income Tax Act, the total income of any previous year of a person who is a non-resident includes all income from whatever source earned. Gross total income. Total income is computed under the provisions of the Income Tax Act before making any deductions under chapter. Exemptions. Exemptions are the tax reduction provided to the employees who are eligible to pay the tax under Income Tax Act. These exemptions will reduce the total income tax liability which needs to be paid to the department. Next is allowances. Allowances are the benefits provided to the employees as per the Income Tax Act. The allowances reduce the specific amount of tax as per the defined sections for each type of allowances under the Income Tax Act. Now the allowances which are exempted under Section 10. Following are the allowances which are exempted under Section 10 of Income Tax from the gross salary for the computation of income tax. Number one is allowances provided to the employees working in the transport system. Border remote area allowance. Children education allowance for a maximum of 2 children. Children hostel expenditure allowance for a maximum of 2 children. Conveyance allowance. Counter-insurgency allowance provided to the members of armed forces operating in areas away from their permanent location. Field area allowance. Compensatory field area allowance provided in various areas of Arunachal Pradesh, Manipur, Nagaland, Sikkim, Himachal Pradesh, Uttar Pradesh and Jammu and Kashmir. Gratuity paid at the time of retirement. High altitude allowance. Highly active field area allowance. House rent allowance. Island duty allowance. Leave encashment on retirement. Leave travel allowance. Medical reimbursement. Mining and underground allowance. Modified field area allowance. Retrenchment compensation. A compensation given to workers at the time of closing down of undertaking or transfer. Tribal schedule area allowance. Voluntary retirement allowance. Next is deductions under Section 16. Following are allowed as deductions from the gross salary for the computation of taxable income under Section 16 of the Income Tax Act. Entertainment allowance. Entertainment allowance specially granted to an employee who is in receipt of salary from the government. Professional tax. Tax on employment. Standard deductions under Section 16IA. New standard deduction under 16IA is introduced in Budget 2018 and it is made applicable from financial year 18 to 19, assessment year 19 to 20. Only salaried individuals can avail the benefit of standard deduction. As per standard deduction under Section 16IA, the taxpayer having income chargeable under the head salaries shall be allowed a deduction of 40,000 or the amount of salary whichever is less for computing the total income. They are usually deducted from the gross salary and claimed as an exemption. Now all employees will get a standard deduction of 40,000 rupees per annum. The standard deduction limit is increased to 50,000 per annum from financial year 2019. Financial year 2019 to 20 and assessment year 20 to 21. Other income declared by employee. The other income declared by the employee, income from house, property, other sources, if any, is added to the gross income for the computation of taxable salary. Deduction under Chapter 6A. Following are additional deductions allowed as deduction from the remaining salary for the computation of taxable income. Investment under Section 80C, 80CCF. All the investments such as insurance, mutual funds, house loan, principal amount, etc. are considered as an eligible investment for the computation of taxable income. Other expenses under Section 80D, 80DD, 80E, etc. Other expenses such as mediclaim, donation, payment of interest on the loan for higher education, etc. are allowed as other deductions for the computation of taxable income. Now, relief under Section 89, 90 and 91. The special relief granted to some employees due to the dual taxation system are also called as relief under Section 89, 90 and 91 and is reduced from the taxable income based on the type of agreement with the other country. Next, taxable income. The net income which is arrived at after considering all eligible exemptions, investments and deductions is known as taxable income. The income tax is computed on the net taxable income for each employee. Income tax slabs. In India, income tax is levied on individual taxpayer based on a slab system where different tax rates have been prescribed for different slabs. Till the financial year 2019 to 20, there was a common tax slab which is called regular tax regime. From financial year 20 to 21, there are two tax slabs the individual can opt, such as regular tax regime and tax regime under Section 115 BAC. Now, the tax regime under Section 115 BAC. Budget 2020 has announced a new tax regime under Section 115 BAC in addition to the existing regime from 1st April 2020. The new tax regime under Section 115 BAC is optional and is applicable from the financial year 20 to 21. An individual or HUF can choose between regular tax regime, old regime or tax regime under Section 115 BAC, new regime depending on their tax planning. Benefits of tax regimes under 100 sections 115 BAC. The taxpayers can choose between regular tax regime or tax regime under 115 BAC. Considering the below given benefits. Benefits are less compliance for the taxpayers because of the elimination of tax assumptions and deductions. Low tax rate and higher income is received in hand. Taxpayers have choice for investment. The taxpayers opting for tax regime under section 115 BAC as the taxpayer must forego the following deductions and exemptions: leave travel allowance, house rent allowance, conveyance allowance, daily expenses in the course of employment, relocation allowance, children education allowance, other special allowance, section 10 subsection 14, and standard deduction. Now, professional tax, interest on housing loan, section 24, and chapter 6A, deduction 80C, 80D, 80E, and so on. Okay, now we will go to create option. We'll go to pay heads. Here I'll create the pay head with the name income tax. The pay head type will be employees statutory deduction. Statutory pay type will be income tax. Under current liabilities, yes. That's it. Okay, now the turn comes of defining salary details. The salary details master contain information on the employee group and individual employee pay structure comprising of both earnings and deductions pay components for the applicable period. Businesses having a common pay structure for a department or set of employees can define salary details for an employee group and classify individual employees under the specified group to inherit the parent pay values. The employee group master prefills the parent group values to the individual employee masters traded under them. It reduces the possibility of errors during data entry and fastens data entry. Pay structure constituting the pay heads and basis of calculation should be similar for the employees falling under the same group, but pay values need not to be the same. Tally Prime is provided with the flexibility to define salary details for the below masters, employee and employee group. Here what I am gonna do is I'll go back and now I am going to define the salary. Okay, we'll go to alter and here I will define the salary. So first of all for beneath M, I'm going to define the salary. It will come under, wait a second. Okay, I'll go to alter and define the salary for beneath M. Effective from 1st April 23, I'll select basic pay. How much? 50,000. Now I will select house rent allowance. Next conveyance. Conveyance will be 5,000. Next professional tax. Canteen deduction. Employees PF deduction at the rate 12%. Next employers EPS contribution. Next, employers EPF contribution at the rate 3.67%. Next is gratuity. Next is income tax. Alright, so this way I have defined the salary details for beneath M, that is the 01 employee of our company. Okay. Next details are defined for Divya. She is also from HR department. 1st April. Here I'll select basic pay. Basic pay is 26,000. Next is house rent allowance. Next is conveyance. Conveyance cost rupees 2,500. Next is canteen deduction. Next is professional tax. Next is employees PF deduction at the rate 12%. Employers next is employers EPF contribution at the rate 3.67%. Next is gratuity. Next is income tax. Alright. Next, the next salary is for Vishwas Kumar. 1st April, it's basic pay. Basic pay is 5,000. Next is house rent allowance. Next is conveyance. Conveyance cost rupees 1,000. Next is overtime. Professional tax. Employees PF deduction at the rate 12%. And employers EPS contribution at the rate 8.33%. Then employers EPF contribution. Then employees ESI deduction. Then employers ESI contribution. Then gratuity. That's it. Next is for sales department. 1st April, basic pay is 10,000. Then is house rent allowance. Then is conveyance. Conveyance charges are 2,000. Next is canteen deduction. Next is overtime. Next is professional tax. Next is employees PF deduction. Next is employers EPS contribution. Next is employers EPF contribution. Next is ESI deduction at the rate 0.75 and ESI employers contribution 3.25 and gratuity. That's next is Deepak Sharma. 1st April, copy from parent value. So I have copied from parent value the same salary. That's it. And even for Kaushik, 1st April, copy from parent value. That's it. Okay, so now the next topic is income tax master configuration. In Tele Prime, to maintain the income tax, the following master setup needs to be configured. In list of masters, payroll masters menu provides Various master setup and configurations required for the successful income tax computation. Number one is income tax payhead details. The payhead details in Tele Prime will be created as per the company's chart of accounts. These payheads need to be mapped to respective income tax components. This is required because the terminologies used for a component may vary from company to company. For example, the allowances for employee travel can be named as transport allowance, conveyance allowance and travel allowance. As per Income Tax Act, transport allowance is exempted to a certain limit in income tax. Now for Tele, to understand that the payheads belongs to which income tax component, income tax payhead details need to be configured. This configuration will take care of the mapped payheads earnings and exemptions as per the Income Tax Act. Each income tax component will have its taxability and exemption as per the Income Tax Act. To display the correct tax computation, you will have to reconfigure the existing payheads. Thereafter, Tele will automatically compute the income tax. So here what I am gonna do is, I am going to back, I'll open alter, here I'll go to show more, and here I'll go to payroll master, and under payroll master I'll go to income tax payhead. So these are the income tax payhead details. Press enter on payhead basic pay. Okay, then in the income tax configuration screen, by default it will show me the name of the payhead and ledger will be basic pay. The master type will be payhead and the income tax component field. Select the proper income tax component for correct tax computation. From the list of income tax components, select basic pay. So I will select basic salary. Tax calculation basis, I will select it on project value, and that's it. Okay. So for conveyance, I'll also select income tax component will be transport allowance, and on calculation on projected value, that's it. Next is employees PF deduction at the rate 12%. Here what I am gonna do is I'll select employee provident fund and on projected value, that's it. Then gratuity will be selected on the actual value, and here I'll deduct TDS across periods. No. Okay. Here house rent allowance, I will select house rent allowance on projected value. Yes. Next is overtime. It will come other earnings and allowances fully taxable and on projected on actual value, and yes. Then comes out to be professional tax. Here it will come on the tax calculation basis will come on the projected value, and the deduct TDS across periods will be yes. Okay. Now after doing this, if deduct TDS across period is set to no, the TDS will be deducted in the month when reimbursements are paid. If this option is set to yes, TDS will be deducted equally across rest of the months of the assessment year. So I'll go back. Now the next topic comes out to be income tax declaration. Employees have to declare their savings, investments and other details such as rent paid, conveyance, leave, travel allowance, etc. to get the correct tax computation after considering these declarations. As per the Income Tax Act, while computing the taxable income, the following are deducted from the gross salary of the employees with regular tax regime. Exemptions. As per section 10, certain allowances are exempted from income tax such as house rent allowance, LTA, transport allowance, children education allowance, and children hostel expenditure allowance. Deduction under Chapter 6A. As per Chapter 6A of Income Tax, the following deductions are allowed while computing the taxable income. Investments under Section 80C, 80CCF, 80CCG. Certain investments are allowed as deduction based on a ceiling for the computation of taxable income. Others, under Section 80D, 80DD, 80E, certain other expenses are also deducted before arriving at a taxable amount such as mediclaim, interest paid on higher education loan, etc. Next is define income tax declaration. The employee can provide the exemption and deduction details to the employer, and these details can be entered in the system as employee by following the process given below. So for this, I'll go to income tax declaration, and here what I'm going to do is, first topic is employee tax regime. So under the tax regime menu, by using the employee tax regime option, we can define employees tax regimes details, as we have already defined the tax regimes during the creation of employee master. We can ignore this step. So I'll go back, I'll go to alter, I'll go to show more, and under payroll master I'll go to income tax declaration. Here I'll select E, employee tax regime, press enter, and I will select all items, and here what I'm gonna do is accept the screen. So they are also these all employees are comes under the regular tax regime. So I will simply press yes. Okay. Now declaring house rent allowance. An assessee can declare house rent allowance which are exempted under section 10 of income tax from the gross salary for the computation of income tax. This allowance is granted to meet the expenditure incurred on payment of rent on residential accommodation. For this, I'll go back. Now I'll go to house rent allowance. Press enter, and now I will select beneath M. I need to specify the house rent allowance for specific employee. Okay, so it will effective from 1st April. Declared 18,500 and proof is 18,500, and place of residence is Metro, and name of the landlord is Gangadhar, and PAN of landlord is AS DFG 5564Q. Alright. Now I will select Vishwas Kumar, effective from 1st April, declared 18,500, Metro, name of the landlord is Gangadhar, and new ASDFG 5568Q. ASDFG 5564Q. That's it. Now the next is leave travel assistance. Leave travel assistance is also exempted under section 10 of income tax from the gross salary for the computation of income tax. Travel concessions provided in connection with proceeding on leave to any place in India. To declare leave travel assistance, the payhead must be credited as earnings for the employee and add the payhead in the salary detail. As per the company policies of Suhas Enterprise Private Limited, company is not providing leave travel assistance. So here we are not declaring leave travel assistance. So we are skipping this. Now the next is transport allowance. Conveyance allowance is renamed as transport allowance. It is also exempted under section 10 of income tax from the gross salary for the computation of income tax. Transport allowance is provided for traveling expenses incurred between residence and place of duty. So here what I'm gonna do is I'll select on transport allowance. Employee name will be Vineet M. Here effective from 1st April, and the employee status is others. That's it. Next is children education allowance. Children education allowance is also exempted under section 10 of income tax, and SSC can avail children education allowance benefit up to a maximum of 2 children. Alright. So here to declare children education allowance, the pay head must be credited as earnings to the employees and add the pay head in the salary detail. So we are not declaring children education allowance for any employee. Okay, so we are skipping this. Now the next is children hostel expenditure allowance. Children hostel expenditure allowance is also exempted under section 10 of income tax, and SSC can avail children hostel expenditure allowance benefit up to a maximum of 2 children. To declare children hostel expenditure allowance, pay head must be credited as earnings to the employee and add the pay head in the salary detail. We are not declaring children hostel expenditure allowance for any employee. Now, next is income declared by employee, that is single employee multiple components. In this section, an employee's income from other sources will be declared, such as incomes from house property, other sources, for example, income from dividend, interest on securities, income received from letting furniture, plant and machinery, buildings on rent, etc. Under this head, you can define employee's declaration and proofs eligible amounts for the other incomes like house property, other sources and interest on housing loan. In the financial year 21 to 22, employee Vineet M has received dividends of 52,500. As per the Income Tax Act, the income received from dividends need to be declared under the head income from other sources. So here I will select single employee multiple components. I will select Vineet M, and here I will select income from other sources effective from 1st April. Declare 52,500, proof 52,500, and qualifying amount is 52,500. That's it. Alright, so this way we have accept the scheme. Now the next point is income declared by employee multiple employees single component. Using multi-employee single component option, we can define the single type of income such as income from house property, income from other sources, and interest on housing loan self-occupied for all the employees in one shot. In the financial year 21 to 22, for employee Vineet M, we have defined the income from other sources already. For the other employees, income tax is not applicable as their earnings are less than the income tax slab. So we are not configuring the income declared by other employees. So we are going to skip this option. Next is deduction under chapter 6A under section 80C, 80CCF, 80CCG. Chapter 6A of the Income Tax Act contains various subsections of section 80 that allows the assessee for claiming deductions from the gross total income from several tax-saving investments, donations, etc. These reductions reduce the tax payable amount of the assessee. So, section 80C, deduction towards life insurance premium, deferred annuity, contribution to provident fund falls under section 80C. The deduction limit for the section 80C together with section 80CCC and 80CCD is 1.5 lakh. 80CCF. Section 80CCF is a subsection of 80C section. This section offers tax saving benefits for the taxpayers if they invest in government approved infrastructure bonds. The maximum deduction allowed is 20,000. Section 80CCG. Section 80CCG is a subsection of section 80C. This section offers tax saving benefits for the taxpayers who invest in a valid demat account. As per law, they are entitled to 50% deductions on their maximum investment of 50,000 rupees and can avail 50% of tax reduction. As discussed on declaring other incomes explained in the previous section, investments under section 80C, 80CCF, 80CCG can be declared using either S for single employee multiple components or multi-employee single component. So here what I'm gonna do is I'm going to select beneath M. Here I'm going to select insurance premium under section 80C with effects from 1st April, amount rupees 24,000. Next is term deposit with scheduled bank under section 80C from 1st April. It amount is rupees 25,000 and proof is 25,000. So the total gross qualifying amount under section 80C plus under section 80CCC plus under section 80CCD is 1,21,000. Net qualifying amount is 1,21,000. So this way we have done. Okay. Now we will go back and here I'll select multiple employee single component. Employee name will be beneath M and here tax regime will be donations. Type of investment. Type of investment will be other eligible investments. So effective from 1st April, declared as 8,000, proof is 8,000. That's okay. So this way I hope you understood all the practical aspects of payroll regarding income tax very carefully. I'll get back to in next video. Stay tuned with me. Thank you so much.